Cornelia Meyer, a business consultant and macroeconomist, and she joins us now from the Swiss capital, Bern. Cornelia, thank you very much indeed for joining us. So just bring us up to date about how spooked the markets were, primarily in the UK, Europe, and the United States, not just by the collapse of the American banks, but by what's happened to this giant, Credit Suisse.
Well, I think they were most spooked actually in Switzerland, because Credit Suisse is one of these stalwarts of Swiss banking. You know, there's UBS and there's Credit Suisse. These are the two biggies. And if one of them, and you look at the name, it's even Switzerland is even in the name, Credit Suisse, that was really not good. There were 4 or 5 scandals, you're right, that happened. There was also a series of very high-powered CEOs who were not Swiss, were very international, very debonair, who didn't quite get what this bank means for Switzerland. And now you had today you had the biggest, the largest investor, the chairman of SNB, saying we can't put in more money, which is totally understandable given that they have put in a big capital injection at the end of October last year, and you just saw the share price tumble. So nobody wants to throw good money after bad.
And of course, it just shows how the global financial system is so connected and also at times so fragile. And the question many people around the world will be asking right now is Credit Suisse, is this an idiosyncratic case, or is it part of a larger contagious problem that could lead to a domino effect?
It is both. It is an idiosyncratic case. As I said, you had these 3 CEOs, you had several. It started when Credit Suisse bought First Boston, which had a really aggressive risk culture, which the Swiss couldn't handle. And then you had scandal after scandal after scandal. So it's that. But it shows how jittery the markets are, that when we saw what happened with SVB, what that meant for Credit Suisse, losing 30% of your market value in one day is really quite bad. So right now, as I understand it, the Credit Suisse executives are sitting with the central bank and with the regulator, the FINMA, to see, what sort of statements should go out. And so hopefully at some stage we'll get some statement from probably the central bank or FINMA. And then it's probably a time where people should just stop to comment. The executives and the investors should just stop to talk to Bloomberg and stop to comment.
Yeah, I know in the United States, Joe Biden came out and said that he would guarantee people's money. So people who had their savings in the 2 American banks that went bust would be protected. I'm not sure if that's the case for investors. And that would come from a fund that banks contributed into, almost like an insurance. So the taxpayer did not pick up the bill for this. Will it work the same for Credit Suisse?
Well, Credit Suisse has, Switzerland and Europe, they have some backstops where your deposits are guaranteed up to a certain level. That's that. So yeah, it's to a certain degree, the smaller people who have deposits are helped or are guaranteed to a certain level. But, it would be a systemic failure, a systemic issue for the Swiss financial system. And the financial system, banks and insurance together are just between 9 and 10% of Swiss GDP. So if you have the second largest bank fail, that would be very catastrophic for the Swiss economy. So something has to give. And, even if they want more capital injections, let's say from foreign investors such as SNB, the Saudi National Bank, they will need to look at regulatory rules which right now don't allow foreigners to hold too much, or any single largest foreign investor to hold too much of the stock. So there will be a lot of hectic negotiations going back and forth over the next few days.
Yeah, well, we appreciate you putting us in the picture of what is happening in Switzerland. Thank you, Cornelia Meyer there from the Swiss capital, Bern.
Thank you, Aaron.